Up. I can see them, and we recording already.
Okay, perfect. Thank you. Good evening again, everyone. Once again, thank you. It's an opportunity to be here. So we'll have, a very brief conversation as regards tax efficiency and compliance. Uh, the ability of having to create wealth in an environment like ours, Africa and Nigeria to be precise, you would agree with me that you need a lot of ruggedity, you need a lot of wisdom, you need a lot of street smartness, right? You need a lot of self-guide. When people say, Omar, the guide them, the guide them. If you don't guide in this country, you'll probably lose out on a lot, right? Which is why it's good that we have this kind of conversations and then educate ourselves. Uh, under this session, we'll have a brief look at an overview of the Nigerian tax system, and then also address some of the objectives that we intend to achieve at the end of the session. And then we'll also speak about efficiency when it comes to tax compliance. We'll look into tax planning strategies for companies, for individuals, and then we'll talk about some of the benefits, right? We can't talk about the benefits without talking about what the requirements are, and then talk about what the sanctions are in terms of non-compliance. Some of the non-compliance, even as regards the current provision, has as extensive, as punitive as jail term. But for God's sake, what have I done that she warrant me going to jail? But of course, if the penalties and consequences are not punitive, it's easy for everyone to avoid, and then everyone to make do, right, without compliance, which creates an environment of inequality. And after that, we'll also talk about the tax planning strategies for companies. We'll look at some very common tax incentive. We'll also speak into VAT efficiency. Looking at the current provisions of the law, we'll also talk about role of technology when it comes to tax management. And then we'll touch briefly on emerging trends in Nigerian taxation. We'll also, give some practical advices on best practices for organizations, talk about how you can be rich and not aware, and the things you could do within the ambit of the tax laws, right? That could give, that level of wealth and you being able to sustain and preserve the wealth. And then we'll talk about some practical compliance moves, and then we look at the key takeaway from that, and then we'll move on. So, one thing we need to understand, I'm sure that some of our earlier facilitators would have dwelt a lot about some of these things, right? But it's also good that we reiterate so that we are all on the same page. I've always understood how wealth is earned, right? A lot of times people think that wealth is just something you can create by working hard, and working hard. But sometimes it doesn't work like that. What creates a high level of wealth is you being able to actually sell goods when it comes to products or commodities, or sell services, or sell solutions, right? Wealth is not earned, right? It is created by solving problems at scale. When we talk about wealth, and that is why people will argue with you that being an entrepreneur and being an employee, right? You may not be able to create wealth being an employee. There are a couple of people who have created wealth by being employees, right? But again, majority of people who know that have created wealth actually have provided solutions. They have provided solutions, they have sold services, they have sold products, right? That is the only level that guarantees you having a high level of wealth, right? One thing we need to understand is that people are not just interested in who you are, who you know, or the qualifications you have, or how you dress, or how you look. Most people look at what value can this person give to me? What solutions can this person give to me? When I was in employment, it was easy to, stay, with the firm I work with, and then advise clients, and provide solutions and all of that. And I saw how wealth could actually be created by you providing solutions. Many companies, many individuals have high level of problem. They have high level of needs. They have high level of complex situations that need solution. You would agree with me when you look at the fintech system, for instance. Talk about how people are creating solution, how I can make people be able to access money, and a Okada rider can access money, a paper seller can access money by having to digitalize some of those processes, having digitalization operating on a very large scale. And that's why you could have people like MoneyPoint, OPay create massive level of wealth, because what they did was to provide solutions. So wealth creation can be earned from employment if you are the MD, or you are probably the CFO or some of the management and stakeholders of the business. But when we talk about proper wealth creation, you actually need to be ready to sell goods. You need to be ready to sell service, which is by virtue of the skills and knowledge you've acquired. I must be ready to sell solutions. Again, I advise people, as an individual, you must also be able to decipher or decide within yourself, what do I want to do in the next 10 years? What do I want to do within the next 10 years? And that will determine what action you should be taking at the moment. There is always a vision, and then there is always a mission on what missions you intend to carry out to achieve that vision. And that brings me to the advice of saying that if your intention is actually to do something in the next 10 or 15 years, for instance, you must be ready to actually get into anything that can aid you to be able to get to that level now. If you want to own a bank, for instance, it might be a good time to actually get into the banking system, acquire as much practical and business knowledge as possible, and then channel it to how you can also create solution. Without much ado, we've talked about the pathways of creating wealth, and how you can also make sure that these solutions are actually in practical terms. By virtue of my current business portfolio, I've had opportunities to meet with different stakeholders at different level of management and significance. And then as much as they are impressed with how you dress, how you look, how you came in with swag, trust me, that impresses them, but they want to hear the solutions. What solutions do you have for us? We have X and Y problem, which is why I mentioned the fact that if you really want to create wealth, you need to start looking at something you can do that can create a solution. The solution can be providing people's needs, it can be providing people's wants. They will pay you for it as long as you're ready to actually provide a solution. When it comes to taxation, right, businesses and individuals, part of why we actually are having this conversation under the Creating Wealth Without Borders is because as much as government wants everyone to be tax compliant, trust me, the Nigerian government is open to collecting all your revenue, your capital, and then, making sure that they tax you to the extent that your business is suffocated, which is why you must look at how you can drive efficiency within your business process, how you can ensure that your compliance is actually being sorted out without you falling foul of any of the regulatory provisions that can actually make you part away with your hard-earned money. You know how important or how difficult it is to get a client to sell a product, to render a service. I'm not sure that it's a good thing when we part away with such by virtue of non-compliance, either by having to pay some stiff penalties or bearing some burdens by virtue of not complying in the very first place. This is why we must be aware and make sure that to the best of our capability, we do all that we can do. Talking about some of the key taxes in Nigeria, corporate taxes, which are paid by corporate entities, limited liability companies, company income tax, and then the personal income tax, right? The personal income tax is the one that you pay either when you're working in employment, which is what your employer takes as payee on your salaries, or what you pay under direct assessment. Direct assessment means that you're probably an entrepreneur or you're running a business, right, that is also structured either as an individual or as a business name or as an enterprise. And then whatever profit you make from those businesses are actually deemed to be taxable in the hands of the owner, which means that you would be liable to tax on that direct assessment. And we'll also talk about the value-added tax, which whose landscape has now changed from what it used to be to what it currently is, right? And we'll also look at withholding tax, which is the advanced income tax that is being deducted from your fees, your monies, your contract compensations, and all of that. The withholding tax has been actually expanded to actually cover quite a lot. I know I was at a church program about last week, having a conversation on tax, and then I was paid honorarium, right? And the honorarium was actually meant to have been subjected to withholding tax deduction, right? For me now, as a smart boy, I don't think I taught them that part. You know, I just overlooked it. And I beg, let them not stress themselves. You know, but again, these are things that have now been enshrined in the provisions of the law to say that look, you can no longer afford to give people tax-free money. Whatever makes you pay someone a tax-free money, you now have penalties for uh, not actually fulfilling those obligations by law. Before now, when you talk about withholding tax, for instance, when the tax authority comes to do a review, tax audit or tax review or field audit on your exercises, they will ask you to pay that withholding tax. You didn't deduct interest at 10%, penalty at 10%, interest at 31.75%, which brings it to about 41.75% for what you did not deduct, and then actually collect the tax also. But the law now is being a bit liberal in terms of the withholding tax regulations of 2024 and how it is going to be applicable when it comes to even collecting the penalties, which means that currently now, if you fail to actually deduct withholding tax, you're only liable to 40% of the value that you should have deducted that you did not deduct, which is termed as the administrative levy penalty for you not deducting what you should deduct. And then the development levy, which speaks to the 4%, which has now been consolidated away from the era when we had education tax, we had the NASENI levy, we have NIDA levy, we have police trust fund levy, payable by companies. Government has now been able to consolidate to say, look, rather than having 3% here, 0.025% here, 0.25% here, 1% here, let's harmonize everything and put it into one levy, which is the development levy. So the development levy is now 4%. It is chargeable on the accessible profit of every company. And these taxes have been administered by two major bodies, right? Which is the Nigerian Revenue Service, which used to be the Federal Revenue Service, and State Internal Revenue Services. Some of the taxes are peculiar to Nigerian Revenue Service. For instance, the company income tax, the value-added tax, the development levy is actually paid to the Nigerian Revenue Service. But for personal income tax, for withholding tax, those are actually being paid to State Internal Revenue Services. And then the objective at the end of this session is we should be able to actually understand what we call tax efficiency within the Nigerian context, and also highlight some key compliance requirements, and also talk about some strategies for how to optimize tax positions. And then we'll explore some practical steps for businesses and individuals. Now, you hear a lot of people say tax efficiency, tax efficiency. How do we achieve tax efficiency? You'd agree with me that knowledge is power, especially in this part of the world. And then trust me, very rare times when you do not make your appropriate claims, and then government reminds you that, you should have claimed this, you did not claim. The Nigerian government that I know and the Nigerian tax administrators I know, they leverage on that innocence and then they latch on that opportunity to actually tax you to the brim, right? Which is why we must be aware of how to look at the legal and strategic ways on how to make sure that, look, rather than my money leaking by way of paying taxes to government, how can I make sure that I harmonize all of this profit and then use it for future expansion of my business? Part of this is spelled out with the fact that, look, before now we had what we call initial allowance when it comes to capital allowances. And this speaks to even when people are rejoicing to say that, because I have 100 million revenue, I'm actually exempted from taxes. Yes, you are. But some adverse effect about that is even your investment when it comes to you buying assets, right? You procuring asset for the purpose of your business. Ordinarily, if you're a taxable person, you'd actually be able to get a refund of that money used in buying the asset from government by way of capital allowances, which will in turn reduce your taxable profit, and that would also reduce the tax that you pay at the end of the day. So what that means is that people buy assets, and rather than buying the assets in the name of the company, right? I do not know, or maybe ignorance, maybe preference. People prefer to say, oh, I'm buying this thing in my name as an individual. And what all of those things do is that they rob you of the impact of having to claim that money back from government. Imagine you're running a business and you bought a car for 40 million, and then you should have been able to claim that 40 million over 4 years from government by claiming 25% on the motor vehicle. If you had bought it in the name of the company, but rather you bought it in your name so that when police checks or anybody checks, oh, I bought it myself, I'm the owner. Just are not tax efficient approaches, right? You need to actually look at how to build your business to be able to accommodate as many tax efficient routes as possible. Now, these tax allowances are key strategies for you to actually leverage on reducing your profit, which will be liable to tax. And the sequence has changed. Before now, you claim what we call initial and annual allowances. Or with the current law, you just claim what we call annual allowances. So what that means is that if you intended to buy an asset that will be used for the purpose of your business, there is no point for you buying it in your personal name. You are going to lose a lot of privileges and tax claims. It's high time you start looking at how your companies, you actually own majority of these assets and majority of these benefits. One key thing we need to understand is that I'd rather do what we call tax planning, right, and tax avoidance rather than tax evasion. People will rejoice to say that, oh, because I'm not a taxable person. It simply means that every other cost you have incurred in running your business, the same way I'm not collecting taxes from you, you cannot come and claim the refund from me. So which means that by virtue of your business operations, you should actually have been eligible to claim as many business expenses, as many allowances as possible from government. But by virtue of the knowledge gap that exists in the environment, people do not actually focus on those things. So it's not good enough to say, oh, let me move away from business thing and let me incorporate. The basis for the decision you would make should be determined by what is your end goal. What do you seek to achieve? What is the purpose for you running that business? That is the only time you'll be able to ascertain whether it is good or profitable for you to run a limited liability company or to run a business name. Because for a limited liability company, for instance, once your revenue is less than 100 million and your capital or asset base is less than 250 million, it simply means that you're exempted. And what that means is that any expense you incur is also deemed to be lost. Capital allowances is deemed to be lost. Whatever privilege or incentive you should have gained is also deemed to be lost. Meanwhile, under the business name perspective, or you having an unincorporated business, which is a business enterprise or ventures without being a limited liability or public quoted company, it simply means that you would be liable to the extent of the profit made from that business. And one of the mistakes people do from that is that people forget that as a business, you actually have expenses to claim. But as an individual, you virtually have little or nothing to pay, right? And I've seen some clients, do this times and times over. There's no point for you running a business as an individual without having to put a proper structure. But we'll get to that in the subsequent slides. And of course, as we are aware, you now have additional benefits that you can claim from, having to do additional contribution. There's an allowance that was claimed before now, right, which was Consolidated Relief Allowance under the erstwhile Personal Income Tax Act, which has now been taken away. You can no longer claim what we call Consolidated Relief Allowances. The only thing you can claim now are things like pension, NHIS, you have premiums, life premium for insurance, and you also have rent allowance. Now, this rent allowance has been pegged at capped at the maximum of 500,000 naira per person. What this means is that for you to be able to have that claim of 500,000 naira, you must have incurred an annual rent of 2.5 million. If your rent is less than 2.5 million, you would only be eligible to claim 25% or 20% of your actual rent as your deductible benefit. So I have reviewed a lot of people for some clients, and then they just say, look, government is not doing anything for everybody. We're just going to give everybody 500,000, and we've given them professional advices. because the law says 20% of your annual rent or 500,000, whichever is lower. And in most instances, for some companies that have people of the lower cadres, they actually fall within those. And by the time they incorporate just 20%, it's not really giving tax savings for their employees. And they actually want to be able to get as much as possible. Some of the key things that has happened within this allowable deduction is, even when you have a life insurance that covers yourself and your spouse, there are claimable expenses, deductible reliefs from your income, whether as an individual or as an employee under any scheme. And then one key thing to pay attention to when it comes to personal income tax is, look, rather than having to get a relief of 500,000 naira or 20% of my annual rent, why don't you get a mortgage or a facility and build a property for yourself to live in? The condition with that is, before you claim that allowance, it simply means it must be an owner-occupier building. It must not be the ones that you do and start renting out and start cashing out. One privilege of that is, as long as you did not use your money to build the house, right? You got a loan to actually get it built, you're going to be able to claim your interest on mortgage. It doesn't matter how much your interest on mortgage is, even if your interest on mortgage is 5 million per year. Rather than this 500,000 naira, you would get to claim your 5 million from your entire earnings without any restriction. So for people who have built houses with their personal funds, not a good idea anymore, right? It simply means that they would forfeit, because these rent allowances are also not automatic. If you don't pay rent, you are actually not eligible to actually claim the rent relief. So what it means is that you've built your house with your personal money, you're not paying rent, you're not going to be getting that relief. So I'd rather get a loan, build an owner-occupier building, and then government will cater for my interest as long as I earn an income, which means I'm going to be paying little or nothing. Another key thing we need to pay attention to when it comes to strategic way of reducing tax leakage from your pocket is the fact that, look, withholding taxes. I've worked with some clients that have withholding taxes with both state and federal, right? Some of them have a couple of millions as withholding tax, but they've not been paying attention to them. They've just been earning their monies, and then they're concerned with whatever it is that they get it, and then they just move on. And when the time comes to pay taxes, to just go ahead and pay the tax from their pocket. What that means is that they are partnering with their hard-earned monies, when they should have actually been able to use this withholding tax to reduce the extent of tax exposures that they have and just pay the net balances. So these are things that you need to start paying attention to. One other key thing when it comes to individuals is the fact that I've heard people say, oh, the moment you earn 800,000 naira, you're exempted from tax. Maybe not 800,000 naira. 1.2 million naira is actually the minimum, right? What that means is that if you're earning 1.2 million and below on an annual basis, you still will be exempted, because by the time you take away your relief and you take away some other deductions that you have, your taxable pay will fall within the first band, which is the first 800,000 as 0%, and then you take advantage of it, right? So which means that for some business entrepreneurs, for instance, that are just kicking off business, you might not want to start compensating yourself too early, right? Have a process of delayed gratification that can make you, earn a little, and be exempted from these taxes. And then find a way, within your business to pay yourself a dividend, which will be liable to withholding tax at 10%. And that's final, rather than you having to pay yourself huge income on a monthly basis that would make you pay huge taxes at the end of the year. When it comes to tax compliance, the penalties, like I mentioned earlier, the offenses and penalties are quite huge, quite compelling, quite punitive. So it's item companies started paying attention to filing their tax returns on a monthly basis and timely, right? And also making sure that they have accurate tax reporting for your processes. And then also prompt payment of taxes. The current provisions of the NTA has also mandated that even when you apply for installment payment of your taxes, your application for installment must actually end on or before the final due date for filing the returns. So that means that for a company that intends to file installment payment for the returns due in June, they must have started paying the taxes before now, so that on or before 30th of June, they are paying the finance. So if you ask me, what is installment about that? Why should I pay my hard-earned money to government from January? Is it money that is pushing me? Do you understand? So I practically will just wait. I would have expected the government to be a bit practicable to say that while you understand that these companies make profit, sometimes it's profit on paper. And what that means is that, yes, you're seeing profit on the books, but the companies are not liquid. Have a system where people can apply for installment and then being able to spread the payment for, say, 3 months after June. But what they did was to say, oh, June is the deadline, start paying before then so that your installment can finish. For me, I rather put my money in Stanbic IBTC or any money market fund and then earn money from them than paying it to government as installment. So that incentive is not encouraging. There's nothing good about it, right? And we also need to understand that compliance is now mandatory and enforceable. I'll draw you to some key provisions of things that have changed. You have the section in Nigerian Tax Administration Act, Section 60 and Section 61. Section 60 talks about access to actually make a direct debit to your bank account, right? What Section 60 mandates is for the tax authority actually has the power to actually now levy, send an instruction to the bank and debit your investment account. So it doesn't matter where the investment is, whether it's in money market, as long as your BVN is linked to any of those investments and you have defaulted in taxes, right? You've been sent an assessment, you don't respond within 30 days, you're actually going to be liable to pay that money. And no one is going to come up to you. You're just going to send an instruction to your bankers to actually debit your bank account. And then government will be right. If you're not then okay with that, you then have to follow having to contact the tax ombudsman, tax appeal tribunal, and then follow the litigation process, which is why we have to be careful. It's not enough to keep your money and think it's safe without complying with some of these taxes. The impact is not too good. And then Section 61, right? Section 61 now talks about the impact of using your asset to actually offset your taxes, which means that government can actually seize your asset and then dispose it and then use the proceeds to make payment for offset your taxes. But before they go ahead to dispose your asset, they would actually need an High Court order before they go ahead to dispose your property. So which means that they can't just collect it and then dispose without getting an High Court order for some disposal. But for Section 60, they are going to be able to debit your account live and direct, and there is nothing you would do than having to start paying lawyers and following court processes. One other salient provision within the Nigerian Tax Administration Act, Section 29, it actually gives the bank and other financial institutions the prerogative and the mandate to actually send the financial statements reports, right? Bank statement report of taxpayers. The moment for an individual, for instance, your monthly inflow exceeds 100 million, and for companies to 50 million. What that means is that the moment you cross that threshold, automatically the banks and these other financial institutions have an obligation to send your bank statement and your information to the tax authorities. What the tax authorities will do with that is actually to follow up with you and ensure that they monitor your compliance, even at the end of the year, to see how much you've paid in taxes, and then tell you that, look, we have the information from Fidelity Bank. You did transactions worth 700 million last year, and then you're declaring 80 million naira as your income for the year. Can we have a basis for you making such declaration? So the provisions are a bit tighter, which is why we have to be careful and make sure that we get to optimize as much as we can. Tax efficiency has quite a lot of privileges, right? Which means that you get your tax burden gets reduced. You have money to actually do other things when you have improved cash flow. Rather than you dashing government now, you rather invest the money and then look at the time when it is the due date, and then you make the payment so that you don't just pass away with your cash. And then you're able to plan your financial planning in terms of you being able to meet some of these obligations, and then also being able to sustain your businesses. You would understand that when it comes to business, cash is life. The moment you have cash in business, you're good to go. So you actually need to make sure that your business is sustained. None of the operations of your business is threatened by virtue of you not efficiently planning your taxes. And then, of course, you have a competitive advantage. Under competitive advantage, we've had people or companies who have had competitive advantages over their counterparts who actually pay taxes, because the ones who pay taxes actually have a higher price. So the customers or consumers will prefer the one who does not pay taxes because theirs is cheaper. So which means that people who evade taxes actually have a high level of competitive advantage over the people who do not pay taxes, over the people who pay taxes. So right now, everyone would be able to say that the moment you actually comply because of these punitive measures, right, it gives you a competitive advantage as you're able to actually compete with other people. Your industrial practice is actually being maintained, and you're still able to keep your heads above the water, comparing the tight Nigerian environment. Now, when it comes to compliance, the only thing that exempts you from complying with some of these provisions are enshrined in the law. For instance, under corporate taxes, even when your revenue is below 100 million, you have an obligation to submit a financial statement. Not necessarily your audited account, but government also wants to be able to monitor your growth over time and make sure that they are also actively looking at what your business is producing over the years. So it's not enough to say, oh, because I'm exempted from taxes, I do not owe government my returns. You still need to file your returns at 6 months after your accounting year end, depending on when your accounting year ended. And for payee, for instance, because employers deduct them from employees, and it's deemed to say worst case basis, you pay them on the 30th of the month, right? So which means that 10 days after the month end, you should actually make remittances of the payee taxes. And also as it affects VAT, VAT is due 21st day of the month, following the month of transaction. But again, when it comes to VAT, if you are a small company and you operate within the 100 million threshold, and then the 250 million asset base, it simply means that you do not have an obligation to file VAT returns on a monthly basis. Only the law now made reference to, however, you can voluntarily file these returns in your own magnanimity, right? So which means that that is also optional. You can decide to. For withholding tax, the withholding tax regulation made reference to you being a small company, not being liable to actually pay taxes. You would actually be exonerated from actually deducting withholding tax because you're a small company. Small company is actually defined under Section 202 of the Nigerian Tax Act, and it defines small company as companies with 100 million revenue and then 250 million assets. Right, and what that does is that if you're a small company, you do not necessarily need to withhold taxes from your vendors, but there are conditions. That vendor must have a valid tax identification number, and the transactions you're doing with that vendor must not exceed a cumulative value of 2 million on a monthly basis. So which means that if you're doing transactions of 100K, 200K with someone at your small companies, you necessarily do not have to deduct withholding tax. And there have also been some modifications to this withholding tax laws, as much as looking at the practicability of you withholding taxes on transactions. You know, before now, you would argue that, oh, because I bought, the tax authority would argue that because I bought a car from a car dealer, right, it does not constitute a contract. I was driving by, I saw a car that I liked, I went in there, I made a purchase for the car, and then I took the car home on the same day. As far as the tax authority is concerned, you would have to prove to them that the 18 million you used to buy the car, that you put it in a Ghana must go and then you took it there. Otherwise, for the tax authority, it becomes a contract of supply. What the regulation has done now is to say that as long as you can prove that you made a purchase over the counter means that you saw something you wanted to buy, you bought it, and then you made payment for it on spot, it will not be liable to withholding tax because it's deemed to be over-the-counter purchase. It does not matter if it's 30 million or 50 million. That does not change the nature of the contract. But you must be careful. Whatever makes you receive an invoice from anybody, of course, you know that there will be knowledge gap even within people, doing business in the informal sector. They would give you invoice. What invoice means is that you are actually a steady customer, and then you are here to pay for that service. The only thing that will exonerate you from this withholding tax is you must be able to show that the asset that you bought it on the same day. Your proof of payment, even when you did a transfer, the evidence of proof of payment, the date on that proof of payment must also show the same date on the receipt. And what you have is an invoice, is a receipt, not an invoice. An invoice means it's a supply, and then there is some sort of credit facility given to you for some number of days. So you need to make sure that you have the receipt and you have the proof of payment, and it doesn't matter how much you've incurred, that transaction would not be liable. And a couple of other things were also stated there, even as much as diesel, CNG, and a couple of other things, just so that the withholding tax regulations is not contrary to ease of doing businesses. And one key thing I must say when it comes to compliance is that you must learn to actually keep proper and complete documentations. The tax authority is not, they don't have your love at heart, right? The tax authority is interested in maximizing revenue collection. So what it means is that you cannot run a business as if everything hovers around just you alone, and the impact is just on you alone. You must be able to keep appropriate documentations to corroborate anything that it tells the tax authority. As long as tax is concerned, whatever the document does not exist simply means that the transaction also does not exist. So you need to make sure that as you run your business and you get busy, you might need to get someone to actually put documentations together for you. Even if it means you need to pay someone a token to actually be able to pile up all of these documents and keep them. Because guess what? The tax authority may not come now, they may not come next year, they may not come in 3 years' time, they may come in 6 years' time. And when they come in 6 years' time, you would actually have a high exposure because over the years, it has just been you trying to put your things together without you doing them in an effective manner. And then you would actually have to part away with your ardent money by virtue of paying those taxes at the time when tax authority receive, along with the compensating interest and penalties at the commercial bank lending rates. We talked about compliance, we talked about tax efficiency. But we must also need to understand that some of these things have a high level of consequences. For instance, you're going to be paying huge on interest and penalties. Imagine you're paying 41.75% of your tax amount. Even if you fix the money and you put it in a money market will probably give you around between 15 to 19%. And then rather than pay government the taxes, you've gone to fix the money either as a fixed deposit or in the money market. When government wants to collect that money back from you, they will collect with interest and penalty at around 41.75%. So between you and I, have you made a profit or a loss? You've actually made a loss on that engagement. So rather than hold on to government money, make payments of those monies without defaulting on those timelines. So I'd rather pay government than say, oh, I want to quickly outsmart them, go invest the money. The return you get on investment will never be enough to actually cover, the tax obligations when the tax authority comes knocking. And then you are now having a series of tax audit and investigations, which means that your company could be scheduled. And one thing to note is that government does not necessarily have to see your company as an entity or being able to locate your office before you can be scheduled for tax audit or investigation. It might be a customer, it might be a vendor, it might be a client that you did business with, and you sent them invoice or they received invoice from you, and tax authority actually went to review that company and then saw, your transactions like being, consistent, and then they pick up the name to check the level of your tax compliance. What is faced to them is, oh, this person has been doing business and this person is not tax compliant. Then they come for you. I've had instances where a client has asked me that I've been here for 15 years and government has never come after me. How come they are coming after me now? Is it that you tax consultants work with them? And I was like, excuse me, sir, I don't understand where that is coming from. Meanwhile, the guy had done a supply for a company that is into an FMCG company, and they've paid him some tons of millions, right? And the tax authority had gone to do a tax audit on that person. And then they picked up, the invoices to say that this person is cashing out from this company. Meanwhile, the man does not have an audited account. He has never filed VAT returns. He has never made any sum or any sort of declaration. And he's existing for 15 years. So the tax authority was of the opinion that he's even going to go beyond tax audit. They're actually going to schedule him for tax investigation. And then they can decide to do a 20 years audit if they like, right? And what that does is that because the company did not comply, it's going to be difficult to argue a case for you to actually get off the neck of the tax authorities. And another consequence is business disruption. You would have gone to places where you see sticker of non-compliance, non-compliant. Sometimes the taxpayers' office are even locked in chains. I've had instances where the tax authority locked, a taxpayer's office, and then the taxpayer owns the building, uses part of it to operate his business, and also had some tenanted apartments there that they rented out. And so when the tax authority locked off the gates, it simply means that no one could drive out or drive in. And then the only space was, if you try to open the chain a little, you have to snake under. And then the tenants, started an uproar to say, am I a criminal? Why should I be crawling under the gate? Why didn't you do the right thing? The government has so much powers currently, especially with the Nigerian Tax Administration Act of 2025, to do and undo. Your businesses will be disrupted. Imagine your bank account being debited or a lien being placed on your bank account because you will not be able to pay vendors, you won't be able to, make funds available for liquidity of your business, and it costs a lot. And that also speaks to reputational damage. I've seen companies who have stickers of non-compliance, like 15 on their door. What the company now did was to go and do a banner, put their name, what they do in the business, and then they use the banner to cover the non-compliance stickers. So if you get there and you don't look behind, you won't see the non-compliance sticker. And what that does is that it gives you reputational damage. Some companies do not want to have anything to do with companies that are not tax compliant. Some major players who have serious businesses to do in this country will tell you that before they deal with you, they want to see your tax clearance. What that does is, if such a person visits your organization, I'll give one practical instance that I've seen happen. There was an investor that was actually coming for a pitch, coming to listen to a pitch of a company he wanted to buy shares in. And then when the man got to the gate, the man is from Italy, Italy or Brazil. And then when the man got to the gate and his driver could not, was trying to enter into the building, he saw non-compliance sticker from state, from federal, and then he drove into the compound and he was asking the person who came to welcome to say that, was that sticker for your business? And man said, it's just Nigerian Tax Authority. I kid you not, the man got into his car and said, we'll restructure this meeting. He got into his car and asked the driver to drive out. And that was the last time they heard from that investor. So some investors, imagine an investor who wants to invest about $25 million in your business. And by virtue of that reputational damage that you have, they just feel, no, I don't want an instance where I'll invest 25 million into your business. And then tomorrow morning you tell me government has debited your bank account. Let's not play rough play with each other. So some companies don't want to put themselves in that kind of position. So it could actually cause you reputational damage. And of course, possible legal actions. When it comes to strategies for companies, it simply means that you actually need to look at a way where you can ensure that you get maximum advantage from government. You could be running a company, either a business name or an incorporated limited liability company, and then you're not structuring your business properly. You having the proper business structure means that you're actually looking at, so I'll tell you this, just hope there's no tax administrator on this platform. Even if they are here, it doesn't change anything. There's nothing wrong with. I've met a client who, has 3 lines of businesses. And what the client does is to say that, look, rather than meeting 100 million turnover, because I want to consolidate everything under one company, I rather let different companies handle these business transactions. My entire revenue is about 290 million. If I had consolidated them under one company, I would have been liable to taxes. But because I ran down 3 lines of business, I would incorporate 3 different businesses that will handle each line of business. And what that would do is that I would actually have revenue of 90 million here, 80 million here, 60 million here. At the end of the day, the 3 entities are actually, are not liable to taxes. Yes, smart move. What he has done is not in contradiction of any of the provisions. But I told the client, you must also, and this is a company that actually invests heavily in assets, right? Plant and machinery, motor vehicles, trucks. and things like that. And I told the person to say, whatever makes you exempted from taxes, it simply means that even if you buy trucks worth 400 million naira, you would also not be able to claim it because you're actually exempted. You can't have a claim from government. And you have to be careful when running your businesses. It's no longer about what is cheap. It's about doing what is right. If you have a cost now as a business, there are some provisions in Nigerian Tax Act, Section 20 and Section 21, talks about deductions allowed and deductions not allowed. So for instance, you have incurred an expense, or you did not incur VAT on that expense, you're going to forfeit that expense, no matter how much it is, based on the provision of the law. You wanted to import an asset or item or motor vehicle, rather than go through port, you went through Lomel Seme, and then you had guys to bring it in. Whatever expense that you're meant to pay import duty on, you did not pay import duty, you would forfeit the expense, no matter how much it is. Whatever expense you incur and you do not pay VAT on it, you would forfeit that expense. So we have to be careful. Even when you receive an invoice and you cannot return it to the person who sent you the invoice to actually include VAT, even if it will increase your business cost, it's fine. Because imagine you having an invoice of 10 million from someone, and rather than the person charges 750,000 naira VAT, you feel that no, the moment it charges me 10 million 750, my cost has increased, and then you prefer him charging you 10 million. What it means that 10 million has gone to Bashar. You cannot claim it from anybody. So you have to be careful. You need to make sure that people you do businesses with are actually also aligning with the provision of the law. There is a wicked provision in the Nigerian Tax Administration Act that speaks to doing businesses with unincorporated entities. Whatever makes you do business with someone now, or a vendor that is not registered for taxes, and you pay such person, you are liable to pay 5 million penalty for doing business with someone who is not registered for tax. So imagine you having to do business with 10, 20 people who do not have tax identification number, they are not registered for taxes. What it means is that those your 20 vendors have successfully handed you a penalty of 100 million. It doesn't even matter if the transaction you did with them was 200K here, 4 million here, 2 million here. It simply means that whatever amount it is that you've done business with them is inconsequential. The law says that an administrative penalty of 5 million will be paid on such transaction. So it's not for you who have companies who have 10 or 20 vendors. It's not going to be, oh, for everybody just being 5 million. The law says per transaction. So per supplier. So what it means is that if you do business with one supplier, 5 million, 2 people, 10 million. And I've had clients who have asked me to say, how is that practicable? I do business with people, they are the only ones who have the material that I use. Oh, sometimes I need to use some informal sector people to come offload my containers and I pay them. And I told them the tax landscape has changed. It's no longer a time for sentiment or explanation. You need to do things properly. 5 million awaits you for dealing with one person. So if you deal with 10 people, that's 50 million naira penalty. So imagine you taking away 50 million by virtue of not having the appropriate tax planning strategy. It's actually not efficient for your business. And the fact that people are also not maximizing deductions and capital allowances. I mentioned this earlier when it comes to you buying assets in your personal name. Let the business fund your lifestyle. Don't be excessive. Before now, there's what we call the rent principle. I'll get there and I'll talk about it shortly. So under this tax planning strategy, it simply means that even your timing, your expenses, your income, you could actually defer them where you feel that it would actually crystallize into taxes. You could also actually try to take advantages of free zone enterprises or tax holidays, which used to be pioneer status. Now is economic development incentive that is being granted, which means that you can have tax holiday for 5 years, right? And all of these provisions are actually there to checkmate companies that have actually abused these provisions over time. And even when it comes to companies who have related parties, the transfer pricing compliance, especially for companies, sometimes they do businesses among themselves. Something that you should have charged 10 million for, but because it's a related party and you guys want to move around, you just say it's 30 million. So what the tax authority wants to check is if your business had done that transactions with the NIC initiative, would you also have been 30 million? No, it would have been 10 million. So they would do an adjustment and tax you on the differential, which means that you actually need to make sure that you maximize all of those opportunities as much as you can. And when it comes to tax planning for individuals, maximizing relief. Don't go and be saving money and staying in a room self when you can afford a 2-bed for 2.5 so that you can claim your relief. That was a joke, oh, not the one landlord will pursuing you, it was a joke. But the essence is that you can only claim 20% of the rent you pay or 500,000 naira, whichever is lower. And it's a good time to actually start getting indebted. One thing to understand is as a business, as an individual, your interest on loan, your interest on assets, your interest on facilities that you get, they are tax deductible. So why would you want to say, once I owe somebody, I won't be able to sleep? You might not be able to do anything significant in this country if you do not learn the act of leveraging and using other people's money. The interest is going to be paid by you as long as you use the money for a productive purpose. But learn to get leverage. You're able to expand your businesses, you're able to do bigger things because you got a loan. Tell me why I cannot get an interest to build a 2-bedroom or a 3-bedroom that I'll pay over 5-10 years. And I have an interest on mortgage, I can always submit to my HR to deduct as a relief from my payroll or when I'm filing my personal returns. Why not? Why should I wait till when I can contribute my own money? We need to start expanding our thoughts when it comes to taxation. You either pay that money to government or save it for your future. Some of those things means that you might need to defer what you need to collect now. For instance, you're doing voluntary pension contribution. Yes, you can access it later. So why collect your entire money now when you can actually do those things and reduce the extent of tax that you pay? Even when you pay life insurance, whatever premium that you pay, they are not deductible from your income. So all of these things are actually tax planning strategies that you actually need to focus on to say, how can this add value to me? How can it help me reduce the extent of my income? For instance, I've had people seeking advices on investment planning when it comes to taxes. Why should I save in money market when I might also get to be taxed on the revenue, treasury bill, commercial papers, and all of that? There's no longer exemption on them. If I'm ready to do long-term investment, I'll do government bonds. So that whatever income it is that I get is exempted from taxes. And we have to make sure that amidst all of these things, your compliance, your efficiency, your tax planning, they are all working together so that you do not fall prey of government and having to pay your hard-earned money by way of taxes. Now, before now, the principle for you to take an expense means that it must follow the rent principle, only reasonably, exclusively, and necessary for the purpose of your business. Before now, that rent principle has created a lot of problems with tax authorities because what a tax authority argues is, how could you have bought a phantom car for yourself? Was it reasonable? Was it necessary? That necessary and reasonable has created issues with the tax authorities and taxpayers. What if it's reasonable for the purpose and necessary for the purpose of the outlook of my business? But the tax authority feels no, it's not in their own judgment. So it means that it becomes subjective. Tax authority tells you, why would they have given directors 100 million? Why would they have paid them 100 million? When your revenue is 350 million, why are you paying them like 30% as emolument? So some of these have been actually debated over time to say that the reasonable and necessary clause is now becoming subjective. What is reasonable for the NIC initiative might not be reasonable for the tax authority. What is necessary for my business may not be reasonable, necessary in the eyes of the tax authority. It's created a lot of rather than having to create a level where we now have subjective conversations based on emotions to say, as if it's your money. How do you tell me what is reasonable and necessary to be incurred for the purpose of my business? It's mine, right? So rather than having to create that gap where the tax authority can argue and taxpayers can argue, the principle has now been changed to say that only two of these factors will now take place effective January 2026, which is the only and exclusively. So it simply means that if the cost is incurred only and exclusively from your business, it doesn't matter how much it is. The tax authority no longer has a prerogative to determine what is reasonable or what is necessary for the purpose of your business. So the way principle is what stands now, meaning that as long as I incur a business and it's only for my business, it doesn't have an hybrid of, oh, this one belongs to the MD, this one belongs to the business. It must be only for the purpose of the business. And exclusively, nothing must dilute the cost. It must be exclusively for the purpose of the business. It simply means that you would have an upper advantage. I talked about VAT earlier, the fact that you need to make sure that you charge VAT is also part of tax planning to actually also monitor. Before now, you could only claim the provisions in the Section 17 of Value Added Tax Act has now been changed under Section 56 and 57 of the Nigerian Tax Act. What these provisions are now saying, under the S2R provision Section 17, it made reference to the fact that VAT could only be claimed when you buy a raw material to be used in a production process, you buy an asset for resale, or you import an item for the purpose of your production process, Section 17. Now, the NTAA has now created, hold on, our cousins have started. Please give me a minute.
Okay.
Yeah.
Okay. Welcome to Nigeria. So they just made it obvious that Mr. Adeyemi is in Nigeria. It's fine. It's fine. Cheers to Adilabu for disrupting this. I could say that I was already having a whole lot of fun. Cheers to Adilabu. So let's just give Mr. Adeyemi a minute. Okay. This is his final slide though, so it'll be here soon. Okay, yeah, his light is back. I've gotten a whole lot of insight into how people get very wealthy in this country.
I'm back.
Yeah, welcome back. I said they just made it obvious that you're in Nigeria.
You see the embarrassment, but we're used to it.
Cheers to Adilabu. Okay.
Sorry for the break. So I talked about VAT. We need to be street smart when it comes to VAT documentation now. You can now recover as much inputs the moment you incur any expenses, and you can actually document all of those expenses. You claim your inputs with the current dispensation. Whether I buy tissue paper, whether I pay auditor's fee, whether I buy something in the market, as long as I get to pay the VAT, I accumulate everything. So when a customer is paying me, I no longer have to worry on me paying the bulk of what has been paid to me. I'm going to be able to actually take a claim between all the VAT I've also expended, and so as long as I keep the appropriate documentation. So it's not a time to tell your auditors, oh, calculate everything and just assume VAT was being taken. No, proper documentation. Once you can show that you actually had suffered VAT and paid to the vendors or deducted them there by virtue of reverse charge, then I would net them off against the output of whatever income I get, and then I'll be eligible to claim them. It does not matter what the VAT is on. As long as you incur VAT now, on a monthly basis, you'll be able to net them off your output to arrive at what we have in terms of what is payable. These are some of the common tax incentives we have in Nigeria. We have talked about the economic development incentive. What the economic development incentive does is actually to create, have a niche within sectors that government wants to see development in. Things like producing electric motor vehicles, things that are greenfield, so that people are actually interested to actually say, oh, if I'm going to have a tax holiday for 5 years, why not invest in all of this? And of course, the free trade zone benefit, which means that if I'm in the free trade zone, I'm exempted. But there are also provisions now that have actually been enshrined in Section 60 of the NTA that actually speaks to second schedule and then makes reference to how you can take advantage as an entity in the free zone. So before you take some of those advantages, there are strict conditions talking about what sales to make to the customs territory and how to organize your transactions if you want to keep enjoying those tax benefits so that they are not being abused by companies. Right. Another incentive is the small company we have talked about, the capital allowances, and of course the export processing zones. How do you balance this? We've talked about efficiency, we talked about compliance. You need to avoid aggressive tax practice. When I say aggressive tax practice, you can't be earning 400,000 naira in a month, and you said 300,000 naira is for pension. It's for police to pack everybody. It's police. Everybody will go and explain in station why you are earning 400. And then 300 is for pension, as if you would die before the pension. So you have to be able to strike a balance, right? You need to maintain a situation where it can be a 60-40, such that your tax plan is not aggressive. The moment your tax plan is aggressive, it now makes it evasion. Let me tell you something very interesting. Are we aware that with the current tax provisions, even when you want to enter into certain business arrangements and they have tax impact, you need to get a clearance from the Nigerian Revenue Service before you go ahead. If not, they have the power to actually nullify that business arrangement and cancel it. So what that means is that you can no longer just keep entering business transactions. You need to go and submit to tax and say, Oluwamio, this is what we intend to do within the next couple of months. And they will want to get your clearance, and then you now have to explain. So there's a lot to be careful about. It's no longer an era where you just do whatever it is that you think you want to do without seeking counsel. You also need to be whatever tax strategy you want to adopt. Make sure it's something that is not explainable based on emotions. You must be able to align those strategies with the current law and ensure that your report is transparent. Like I said earlier, there's no reason for you to have 3 bank statements and you're telling tax authority is just one that you have. They would find out anyways because your BVN or BVN of directors are linked to some of those things. So rather than do that, why not incur valid business expenses, buy assets, buy things that your business needs, expand your operations. If there's no profit, there's nothing to tax, right? So it's not just about keeping the money. That's not how you build wealth. How you build wealth is being able to build that business to a level where you can say, you know what, I'm located to Canada and I want to dispose of this business. And you sell it for $100 million or $50 million. But you must be able to build that asset base. And that's where it also relates to we being able to create wealth. So rather than you paying all of those monies in taxes, be more efficient in your tax planning and then make sure that you maintain strong internal controls. I've seen clients who have actually designated, anybody does anything as long as they like. Within February and March this year, one of my clients has been able to incur a penalty of 70 million naira. 70 million naira because the people in their procurement wanted to meet their target and they just started doing business with everybody. So what they did was that they had done business with like about 14 vendors that were not registered, right? And it's 5 million per vendor. So what that means is that because they wanted to meet their own budget, there's no internal control. The procurement makes its decision and then rolls with it. And then the transactions were less than 28 million. So imagine because we wanted to do a transaction of 28 million, you've got to incur 70 million naira liability. So you've got to maintain strong internal control so that the work of one person serves as a check on the work of the other person. And no single person can just take decisions. This is just talking about the rules of technology when it comes to tax management. We're all aware that the Nigerian Revenue Service is changing the 31st of May. We have not even finished consuming Tax Pro Max. The tax authority says we should move to Rev 360. So you'd agree with me that a lot is changing and you cannot afford to be caught off guard. So we must also try to see how we can leverage on these softwares, right, to ensure that whatever we put in there is accurate. I've seen tax audit reports where the tax authority says, this was what you filed. So the company made a mistake in its VAT returns and then put some revenue that they did not earn because they were trying to achieve a particular VAT amount. And when tax authority came to say, but you told us that you earned this on your VAT returns. How come you say revenue is this on the audited account? If you have presented a statement on your tax returns that is submitted to government, you can't go back and say it was wrong because simply means that you are either trying to hide something. So it's a lot you need to be, you will have to prove and prove. At some point you get tired of proving. And so even if you need to automate some of these processes, set up dashboards that can actually help you keep all of these things, it's very important. Don't keep your documents manually anymore. Try to digitalize your process. All the invoices, everything that pertains to your business should have folders on your personal computer. And also make sure that you have a high level of integration within your financial systems to avoid you being picked on the wrong part of the law. Emerging trends in Nigerian taxation speaks to, I mentioned this earlier, increase the digitalization by tax authorities. Everything is now being digital, tax audit, review, your bank can be monitored. And of course, it's data-driven. The tax audits are data-driven. Tax authority will come and tell you, we already saw that you had transactions in like 4 banks and you made income of X amount. So whatever it is that you want to give, they already have a data that is feeding what they want to check. And then you must make sure that you are actually also in line with a high level of preparedness. And of course, the VAT scope, which has changed based on what I explained earlier. And then government is also looking at how to tax people in the informal sector. Of course, some of them think they are untouchable, especially with the Nigerian environment, but it's just a matter of time. Everybody will pay, everybody will collect. It's just a matter of time. We are not used to it as a nation. You know, we are in a situation where someone could call you from the presidency and say, what are you doing? Why are you investigating this company? Or why are you harassing this person? So it's a lot with our peculiar environment. So you just need to make sure that within your own ambit, you've done the best that you could do. And some of the best practices we would recommend is actually for you to ensure that you do periodic tax check. This tax health check are things that you used to even give in terms of compliance. How am I doing? It's not that 6 years someone tells me, oh, I'm owing 80 million. So I'll share a practical instance of a client who had told the board that they had a tax credit of $1 billion, maybe 1.2 billion thereabouts. And then the the company insisted that they wanted to get a refund from government. You want to get a refund from Nigerian government? Okay, let's see how that plays. And then I promised the board that the money was going to come in. And by the time the tax authority came, they did a refund audit for like 6 years. And by the time the report was out, they came up with a liability of about 15 billion, right? To say that, okay, yes, we are planning that we will refund you this 1.2 billion, but you're in government 15 billion. By the time they provided documents back and forth, they reduced the liability to about 9-point-something billion. And that 9-point-something billion, the tax authority said they were going to collect it. So remove your 1.2 and then balance of 7.8. So if you're not in the right standing in terms of documentation and business process, there are certain things you should not do. You need to do periodic tax check and get tax professionals. You might pay a consultant 500,000 per year who will save you millions of naira. Then no, there's nothing special they are doing. I'll do it myself. Is it not on Google? I will check ChatGPT is there. Well, at your own prerogative. And then you also need to make sure that we're having this kind of consistent trainings, having conversations, having webinars, and you also need to make sure that we keep up with regulatory changes. The law changes from time to time. Part of the things the tax authority will do is that when people go and say, oh, I have putting up a business together and I'm seeking for your approval, it simply means that there are some gaps within the tax law that they are leveraging on to be able to come up with those agreements. The tax authority would quietly amend all of those things, accumulate them. And then when they are releasing Finance Act and subsequent years amending the law, they will go and block some of those leakages, because for them, they don't want anybody to have any tax leakage to like, which is, which is not right. The system should be enough for people to do tax planning without you infringing on their rights. And I've heard some of my legal colleagues talking about how that infringes on fundamental rights. How do I want to go into a transaction and I need to tell you? But currently, no one has taken it to court, so which means that it is what it is. And then you also need to develop a tax compliance calendar. Now, rich and not aware, why ignorance is a bigness killer. We've talked about how ignorance can make you pay beyond what it is that you've earned, or having to part away with your wealth. Monies that has taken you a very long time to gather, you now have to part away with it in a few weeks just because you don't do the right thing. Residency rule, for instance, for individuals, the law has been amended to even when you have economic ties, family ties, it's no longer safe to say, oh, because I didn't work 183 days. You could also have economic ties, your wife, your children, your family, they are all in Nigeria, and it could be traced to that. Some other people operate in different zones. The law has also designed what we call a principal place of residence to track them, which means that I could also decide to use the head office of the employer as a basis for subjecting it to taxes. And for capital gains tax, it's no longer 10. Gone were the days where we're able to actually, argue for some transactions liable to 10% instead of 30% for my client. But now everybody's on the level playing field. CGT is no longer at a flat rate of 10%. As an individual, where you fall within the band is the tax that you pay. And as a company, of course, you would actually also be eligible to pay as high as 30%. And the fact that digital assets have also now been incorporated. Nigeria may not have the level of infrastructure yet, but with digital transactions, there's also a provision for virtual asset service providers, which means the brokers, people who act as intermediary between someone buying crypto, they also have the risk of losing their license if they do not do effective disclosure of returns to the regulatory authorities. So there's a lot that is happening. I talked about the 800,000 naira earlier, but You being exempted from taxes does not mean that you do not owe government the returns. Just file the returns, put the same money you've earned, put it there so that no one is asking you for 100,000 for the first month, 50,000. And they might wake up in 2 years' time and then calculate all of that. Before you know it, you are owing 3.5 million. It's for police to pack everybody. Where will I get 3.5 million from? I've had an instance where an MD told me, I'd rather sell this company than pay this liability and relocating to Ukraine. The man said Ukraine at that time, Ukraine was peaceful. He said, I will never pay. I'd rather relocate, and all of that. But at the end of the day, these are costly mistakes that take away your wealth. Imagine you having retained earnings, right? That you've retained to say, oh, my business, I'm going to build industries. And the government comes and says, okay, that retained earnings that you kept for all of us, we are giving 2 billion first. Let me use it to owe body. It's a lot of, harm cost on businesses. And of course, the fact that you employ someone does not mean you don't need to file your returns. Your returns should be submitted. It's just to check with your HR or check on your page how much was filed for me. If you have other income, for those of you who have houses, and have not been declaring, don't worry, the time is coming. Tenants would also now have obligation to deduct from your money and provide your name, your taxpayer, and your address. And the government would also use that to pursue people. And then this is just like a closer conversation to say that as either as a founder, as an investor, as a freelancer, you need to take this route to actually make sure that you regularize your processes, make sure that you're registered as much as you can, document your transactions and make sure you're doing the right things. We'll also share the slides so that people can also go through. I'm trying to round up because of timing, and tomorrow is Monday, of course, as usual. Key takeaways: tax efficiency must be legal, must be strategic. Compliance is non-negotiable. You must be proactive. Don't keep government's money. You will pay with your sweat and blood. Even the Bible says, give all to Caesar what belongs to Caesar. The Caesar will collect your neck. There's something we say in Yoruba when we say that when you seek words from the devil, they say the devil is afuninifila, like the devil gives you cap and comes for the head. So when it comes for the head, what will I now be using?
Put the cap on.
So that's the typical tax process in Nigeria, and then we just need to make sure that we are doing the right thing. So with now, I bring it to a closure. Thank you everyone for listening. It's been a good session. Thank you.
Okay. Now I just feel like I one of the things I wrote, you should write a book on this, on tax. This is too many knowledge, too many in-depth knowledge given. Like this is.
Nick, I'm seeing a lot of reactions. Can they convert it to money? Can they convert it to or USD? Of the emojis.
No, I will say this. Like, I don't think any masterclass of this kind will not worth more than 100,000 naira for this kind of masterclass. I am not just going to say that this is practical. This is just practical steps. I said something while Adilabu was sent away for it. I said I now see why some people will continue to get wealthy in this country, because they have the secrets. They already have, rather than them go all the way to say they want to evade tax, they would rather just employ a tax consultant, get these things sorted for me, make sure there is no loophole anywhere, and boom, it saved them a whole lot of stress, saved them a whole lot of penalty or liability to be paid, get them to put in all the whole relief. And that's how most of these people get wealthy. That's how they are able to. And when you talked about putting assets, thank God Ajibade is on this call. We had a consultation for a Ghanaian firm one time, and when I was like, Gideon, what's going on with these people's statement? Like, how come I'm not seeing the bulk of the assets? They just popped assets. They don't even have money. They don't even have. I'm like, how come they don't have money? How come they don't have like physical cash? Everything is pumped into assets, and I have found out that this is just the secret. And with what you've shared tonight, sir, I can tell you that this slide, I see people already texting me on WhatsApp and asking for the slide. We share the slide and we also share the recordings. I will just take about a few questions. I don't know if you can drop your questions on the chat box or you just raise your hand. I'll just take about two questions because of time. The time spent, I can tell you that is worth it. Is worth it. Is worth it. So just take about two questions. I have one question here. I particularly have one question. So this question says, if I'm for someone just starting to build wealth, when should tax planning become a priority? Because I can tell you, 80% of our community is between the just starting their career or in the middle phase of their career. So when is it the right time to start planning to have tax as a priority base?
Okay. If you ask me when the right time is, I'll tell you that yesterday. Look, guys, I'll be very honest with you on this call. The way the Nigerian tax government is taking taxes, you can't afford not to build tax into the DNA of whatever business you want to do. Some businesses, it is tax that will kill them, their existence. Some businesses, tax would actually shoot them into the next level of wealth. So the moment you actually conceive the idea of running a business, you actually need to build in what will be the tax impact? What am I intending to achieve? For instance, the person that talked about him having 3 different companies so that he doesn't pay taxes is forgotten that he would incur some couple of millions in assets and then you lose them. Something that government should have paid you back for. How much taxes should they have paid that can, cover you taking 100 million in 5 years because you've invested 100 million in 5 years? So if you ask me when the time was, at the point where you conceive an idea, and it's not too late. Even when you're doing a business currently and you actually want to seek advice, seek tax counsel. Don't pay your hard-earned money. Build your wealth. Keep your money as much as you can. Get tax advantages. Make sure that you pay the minimum that you can pay. Let it be that, okay, Ebenezeri, this is the extent to which we can go when it comes to tax savings. So I'll say the better time was yesterday. There's no time to, don't say, oh, let me be, because you can build all of the wealth and you'd have run foul of all of these provisions. And then Caesar comes in 4 years' time to collect what belongs to Caesar and takes away your head. So we have to be strategic.
Yeah, thank you so much. Thank you so much. About Caesar coming, I think we witnessed one film recently where she didn't pay tax for a while, and they kept sending her the notice and everything. They kept sending her, she kept saying, "What is this? How much am I making?" Then the judgment day came. It was very funny, and they said, for so number of years that you have evaded tax, we have done BOJ for you, and now your total tax is 11 million. He said, no, you people should come and carry the company. You people should come and do this one. I'm going back. I will go. And when she came to meet me, I said, the first thing I said to her when we were having this conversation, I said, see, if you say that you are saying that, oh, you didn't make this money, you did not respond. You did not do anything. You did not make a move. You are liable to pay that money. They can take it from your account if they want to, because there was no, and was like, I didn't know who to go and meet. I said, they were sending you mails. I was like, see, so the knowledge. So by the time we had the conversation, and I had the meeting with LRS, and we went back and forth, and I was able to do, with the help of Ajibade, we were able to do like an express financial statement for her to now declassify all the income. Because what happens to you is when you don't declare, once they see any money comes into your account, they believe it's an inflow, it's an income. You have just made money. So we have to now declassify all the revenue, all the inflow into the account and say which one is revenue, which one is not. And we're able to beat it down a bit. Another question I have here is a very interesting one. A lot of people mix personal and business money. How risky is this?
Extremely risky. It's probably some of the riskiest things that can happen to you now. I did a training for a client in the second month of this year. apparently there is someone who handles ticketing for the executives. So what happens is that when they want to book flight for any of the directors or for any of the expatriates, they send money to his account. He's one that will book the ticket, he's the one that, and what I told the guy was, well, you must be ready to answer to Lagos State government, because what that would do is that it would show Lagos State government that you have huge inflows, which may also be deemed to say, oh, is it benefit the company is paying you? They are just tagging it as business expense or as travel. You are getting some form of commission, and then arguments will start back and forth. And then the request for a bank statement, and even things that were not there before, things that were not in light would come. Business owners are of the opinion that is my money, is my business. No, don't do that. Don't do that. Business should be business. Your personal fund should be personal fund. There's no reason for anyone to pay business money into your personal account. Don't do it. If you are doing it, stop. It's not tax efficient. You know why? It is easy for you to keep track record of every money that goes from your account into the business. So, for instance, the business wasn't liquid and you had to fund the business account. It's easy for you to actually classify them under director's current account, which means the business is owing the director. The moment the business has money, it will repay you. But you cannot afford to actually be diluting company's money with your money. You want to buy suya, you don't have money in your account, you want to remove from business account. Don't do that. You want to dash people money. Don't do that. Don't mix your personal funds with your business funds. Have a separate level of documentation. Even when any of the accounts are illiquid and you need to move money, move them as either loan to any one of them, but don't keep all of them together. It messes up your entire defense when you want to make a claim either with state or federal government. Just try to put in proper perspective. Any cost that is not from business, for instance, people are not aware. I'm running around for my business, right? And I use fuel to actually move around with my car or with the company's car in whatever capacity. And then I go from one place to the other. Why should I use my personal ATM card to buy fuel when I can use the company's card? Why should I bear the cost when the company can bear it? If I don't have profit, if I have loss, I won't pay any form of taxes. But people will buy from their personal account and they now say, oh, I have expenses, I bought it from my account. You need to be able to, if you need to get utility card under your company account so that you move money there, move 100,000. When you are done, move another, and you put the nomenclature of whatever it is that you're doing. But it's high time people stop that. It's current tax terrain is going to be massive. So you actually need to guide ahead of time.
Thank you so much, sir. Not even with the fact that our very own Taiwo Yedele just became the Minister of Finance. Let's expect a whole lot. A whole lot of improvements. So we got a question here from Fumi Sheza. She says, thank you very much for this very insightful section, sir. My question is, as a recent graduate, when am I supposed to start staying tax compliant? I have not gone for service and my employer does not deduct taxes at the source. Is there a particular time I am supposed to start filing returns? Okay, over to you, sir.
Okay, so interestingly, I'll tell you from the position of the law and reality of business. From the position of the law, as long as your earning is below the minimum wage, 70,000 you're exempted. As long as you earn 1.2 million naira per annum, you're also exempted because your tax will fall within the first band, right? 70,000 naira means 840 per year. However, if your employer does not deduct taxes, look, even the NYSC copper allowance is admissible to tax, but government doesn't tax it. Whatever makes you have an income is liable to taxes. Now that your employer has not deducted, you could also decide at the end of the year to aggregate everything that you've earned in the course of the year, right? And then see to the extent of expense that you incur in arriving at that income for the purpose of filing under direct assessment now. It simply means that that tax will be liable next year by March, effective March 2027. If your employer is not deducting, two things you can do. As a child of God, you can either mandate them to start deducting, right, and let them give to Caesar what belongs to Caesar. I could also be, leave your employer out of it. If you want to do your tax declaration by the end of the year, you check how much you've earned, look at the expenses you've earned, and then net it off against. Again, what you're doing is more like an internship. Nothing excludes them from the law except where what you're earning is not substantial enough. But where what you're earning is substantial enough, you can find a way to comply by consolidating all your expenses, keep documentation of them, and then let's see how you can use them to net off what you'll be paying next year. But for your employer, they might just feel that they do not want to put hardship on you. And it's also possible that your employer has also taken up the cost. You can just find out informally. I have clients who take up burden to say that, look, we've been paying these people X amount. We have to keep paying them X amount. Whatever tax obligation they have, we'll pay it from the company's account. So that might be what they're doing. So you can just find out informally, and then you can decide on what to do by year end by making self-declaration.
Thank you so much. Thank you so much. Fumisha, I guess you're good. Thank you so much, sir. I would say that this series has come to an end. I really don't want it to, but this has been a very interesting series, and I could tell you guys that I'll share the recordings during the course of the week. Thank you so much, Mr. Adeyemi. I'm grateful. God bless you. God bless you. Yoruba will say, Amarinba, and is ahead for you always. So, that's the scope. That's the standard you set. So ahead anytime. So thank you so much, sir. I'm grateful. Guys, I needed for you to be able to get the most of Mr. Adeyemi. Go and follow him on LinkedIn. Follow him on all social media platforms. You just go and read the asset and the resources that is there for now. Don't worry, be sure that you're going to drop some, you're going to drop more. So thank you so much, sir. I'm grateful. Guys, I've come to the end of this particular series. I was going to share this. I said I was going to share it at the end of the series anyway. Sometimes some people ask me some few questions one time. They say, Nicholas, how do you get your speakers to come on board? I don't know. I have some people here that knew when we started TNI about 6 years ago. We had presidents of different faculty of management sciences of Unilorin, Unilag, OAU, Ekiti State University. That was how we started. That was the idea. That was the source. And over time, we've been able to grow. We've been able to push ahead, and see today we have a couple of top experts in the industry come around on this same TNI. We've done the CEO of Conga Group. We've done a whole lot. We've done commissioners of finance of states, and I can tell you guys that this is God. Would not take out the God factor. This is God being spearheading this initiative, and also to men like Mr. Adeyemi that God has planted for us to say that, when we reach out to them, they embrace this, they come on board, and even without asking for a penny from us. I will not lie to you guys. The difficulties there is that if I tell you how many mails, how many people have tracked on LinkedIn, and how many rejection we get. Because when this thing drops as an idea and I say, I want to pick this up, this is the topic, I say with the board of directors of TNI, I tell them, this is what is on my head. This is how I'm feeling. I'm feeling so uneasy about this particular topic. Let's dive into it. Who should we bring? We bring a whole lot of people. We bring name suggestion. We message them. We get people who tell you, no, I'm not available. No, I don't do public speaking. But here we are. I'm thankful to God for people like Mr. Adeyemi that has been accommodative, has been responding to us. Thank you so much once again, sir. And this is just to tell you guys that whatever the dream is, this particular topic was from the mind, and here is it being achieved physically. This is us on the platform. So whatever it is that comes to your mind, don't let anything limit you. Don't let anything limit you. It's just for you to see. Anyhow you need to start, start. Anyhow you need to start, start. One of my friends told me something last week, and I think this it has been my mantra for the rest of this year. He said, a man cannot be unlucky for 365 days. A man cannot be unlucky for 365 days. Like, that's to say that at least one day, I go jam am. So let's keep at it, and God bless you guys. See you at the next series. I don't know if it is this year because there's a lot coming up, but see you anytime soon. And thank you guys. Thank you, Mr. Adeyemi. I'm coming to ride in your car soon. Don't worry, that's an expo. I've seen it and I'm coming to jump on it. Thank you guys. Love you always. Thank you. You get a feedback from us. You get a mail feedback from us. Thank you guys. Bye everyone.
Thank you, everyone. Enjoy the rest of your evening. Let's prepare for Monday. Bye.
Yes. Cheers.